JBlog, 26th of September 2010. It's been a while since I've done a blog. Missed a couple of weekends there, but here we are again. And first thing I'm looking at is gold. Gold seems to be a big thing in the news now. Gold's run up to 1300 on Friday was definitely very impressive. No doubt about that. It reflects the inflation fears and the need for real physical assets that people would like to have in a time of possible inflation. Now, inflation is not a certainty. In fact, there are definitely still a lot of analysts that are looking at the possibility of deflation rather than inflation, in which case you want to be in cash. In inflation, you want to be in anything but cash. So getting this one right is quite important. Gold is one of those things that, of course, has no practical purpose whatsoever. It is money. It is ideal money because it cannot be printed or in other ways produced. So therefore, it is always solid. If you have an ounce of gold, you have an ounce of gold. 10 years later, 100 years later, 1,000 years later. Um, Poor man's gold, also known as silver, has had a similar run up, actually very impressive. It took quite a bit longer to get started, but once it got out of the gate, it certainly ran up very, very strong. In fact, if we are looking at the gold silver ratio, that's how many ounces of silver does it take to buy an ounce of gold. We see that there was an uptrend here in effect for almost a year, and that uptrend has definitely been broken. So silver, people like silver. There is a rumor out there that JP Morgan has basically shorted the silver market for years, possibly even decades, and there is more silver that has been sold than silver that's actually in existence. The difference between gold and silver is that silver gets used up, gold does not. So therefore it is very possible that there are actually more ounces of paper silver out there than silver, which could be a nightmare for whoever wrote the paper. Because eventually people will say, well, where's my silver? And then that's when people go to jail. You cannot sell something that doesn't exist, even if you are JP Morgan. So that is that. Now, gold price looks very impressive in US dollars, but it's not as impressive in euros. In euros, the gold price had actually hit a high back in June, and of course, the euro has gone up, where the US dollar has gone down quite dramatically. Here is the US dollar, and it has definitely broken its uptrend and has actually made a new lower low and a lower high at this point. I'm looking at the US dollar as being oversold, quite dramatically oversold at this point, and I'm looking at many of the other currencies being vastly overbought, especially the euro, considering what bad situation the euro with its member countries is actually in. I'm currently acquiring options on UUP, which is a US dollar bull um, ETF, and that ETF does not move very fast, so it's a very boring thing to watch, and I don't mind boring these days. The last year has been entirely too exciting for me personally. So I am somewhat bullish on the US dollar. Not so much that I'm bullish on the US per se. I'm just saying it is way oversold where it should be, and mean reversion does work. So I am doing that right now. Copper has definitely broken out. But again, a lot of these moves are really US dollar related more than they are actually um, materials related. Here is gold in uh, oil, which means how many barrels of oil does it take to buy an ounce of gold? And there you see that relationship has not changed. So this is more of a currency play than it is an actual commodity play. So that's something important to remember. Natural gas has dropped off further. Shale gas is still plentiful. It's not selling as well, and of course, the US economy being in the dumpsters as it is does not consume a lot of natural gas, so natural gas has been down. I acquired some over here and I sold it some over there. That was a good trade, a complete coincidence. I just said, well, it's cheap, I'm gonna buy some. And then on the other side, I said, well, it's getting a bit expensive. I think I'm gonna sell some. Um, so not no rocket science there really. Buy things that are really cheap and sell things that are really expensive. At this point, I'd be selling gold, a little bit of gold, because it is getting very expensive. If you are looking at gold here, I mean this is a run up that happened for now since before August, just the beginning of August, where it ran up and it ran up straight up, and it now shows RSI very oversold. Last times that the RSI went this high, it has sold off eventually. I would not be acquiring any here, and maybe even lighten up on a position. Stochastics again looks very overbought on the gold side of things. The entire planet has jumped onto that bandwagon, and that's just a bit spooky. Markets, I've been plain wrong. The markets have not done what I thought they would be doing. I thought there would be a drop of some sort. These markets are simply not wanting to drop. What can I say about that? Lots of people think that markets drop because the economy is bad, and markets go up because the economy is good, and the stock goes up because there's something good about the business, and stock goes down, blah blah blah, and so on. Nothing could be further from the truth. The only thing that moves stock prices is people buying the stock. Therefore, if people are buying the exchange, like for example here the New York Composite, if people buy stocks, the stock prices will go up. If people are selling stocks, the stock prices go down. That is the only thing that moves stocks. And stocks are not really forward-looking either. People always think there's some sort of a magic in the stock market, and the stock market magically knows ahead of time what happens. No, it doesn't. I mean, it did not know in 2007 at the very highs that 6 months later we'd be looking at a disaster. It didn't see any of the sort. PE ratios were way out of whack, and it just kept going up. And it really so much for forward looking. There is better forward looking indicators. Stock market really isn't one of them. So what I see here is Wall Street simply throwing tons of money at the stock market because that's all they can do. They have driven up the stock market way too far. The valuations are not there to support the current prices, and now they're sitting on it. The retail investor is not entering this market. Either they don't trust it, which is part of the reason, or otherwise they're simply broke. I mean, what are they going to buy things with? So they're staying out of this, and now Wall Street is sitting there on a whole bunch of overvalued papers and does not know what to do. So what do? They buy more. They're hoping eventually the retail investor will come back, trade the hard-earned money for overvalued paper, so that Wall Street bankers can continue paying themselves bonuses, because nobody wants paper for bonus. They have to turn it into cash sooner or later. And I think that cash isn't coming. I still believe we're looking for a disaster to happen here for plainly fundamental reasons. Nothing else. I talk about that in my trading blog. Here's my last article. It talks about the recession has ended in 2009, that big oopla that they were talking about. And in my opinion, that's simply based on government borrowing, government spending. If you look at the GDP formula and you're looking at it, there is no government borrowing in this formula. So if the government borrows $6 trillion and spends it, then GDP looks really good. But eventually it needs to come back, and that's when things get really bad. Things I've come across articles that I find interesting. Here's Greenspan talking about the fiscal stimulus worked far less than expected. Well, duh, is all I can say to that. Can we please have our $6 trillion back? No, I guess not. That's spent. Well, thank you very much. Thanks for coming out. Here's a little story about foreign banks not making a lot of money in China. That is not surprising neither. Lots of companies went into China thinking that they'd make an enormous amount of money there. The Chinese are way smarter than that. They make sure that their own will profit and everyone else can, well, pick up the pieces. There's actually a very interesting thing happening. You might not know that China sits on the majority of the world's rare earth metals, and without rare earth metals, there is no high tech. There, people always go, well, the United States could put their high-tech industry back together and they could be making chips again and they could be doing this and could be doing that. No, the Chinese are sitting on the materials, on the commodities that it takes to make those things, and they are actually not exporting them anymore. So, if you want to build high tech, you have to do it in China. China has the world in a stranglehold right now, and this is a really ugly situation for the rest of the world. And China is definitely exploiting this to their highest abilities. Regulators are targeting window dressing. This is when banks are buying lots of stuff before the month end, and then selling it right after just to make their numbers look good, just temporarily. So more regulatory stuff coming up. Um, Family income has not gone up for a decade, which again is not surprising. I don't know which rock these people have been living under. Prices have gone up. That's why we are poorer now than we were 10 years ago or longer ago than we were. We are poorer than our parents were. Um, the only thing that has grown bigger in the meantime is government itself. But as for the individual, we have not shared in this boom. So as soon as the boom starts filtering down to the common people, the taps are turned off, and yeah, and that's um, why money seems to accumulate in certain quarters and not in others. Um, Central banks having a rough time to pull out. The recovery is not catching on, and now people want the central banks to stick around and continue pumping money into the market, into everything. This obviously cannot be done, but it's a telltale on our culture of not being able to handle any pain anymore whatsoever. Our parents and grandparents were able to tighten their belts and say, well, we have lived beyond our means, and this is now time to tighten the belt. But in today's age, we are certainly no longer willing to do that. We want everything right now, right here, and it's probably going to hurt us really bad. Jobless claims going up, going down. If they go up, then the market ignores it. If they go down, then the market thinks the recession is over, blah blah blah. There is so much news that comes on both sides of the fence. We don't know whether we're coming or going, really. I mean, pick your statistic. I think we're going down, but that's just me. Trade deficit narrows. What else do I have? House prices drop. That's probably the biggest deal. House prices continue to drop no matter what happens. Foreclosed properties are flooding the market. That's just a reality. It's not headline news. Nobody wants to know this sort of thing, but it will depress house prices probably by another 20, 30% or so before this is all over. And it could be a very long time. Housing starts rise. Well, that's just builders building on spec. That doesn't necessarily mean there's actually buyers out there buying those properties. Um, then we have S&P advances to 4-month high. I've already talked about that. Portugal and Ireland are in trouble. Household worth in the US declines 1.5 trillion in second quarter. All we can say to that is ouch, the little guy is being squeezed again. Tons of stuff, both sides of the fence, continues to look ugly. I don't really see an improvement. In fact, I think it is getting worse. But as I said, that's just me. I'm out of time today, but I've been doing lots of talking. I hope you are good next week. Hope you make lots of money, and that's all I have for today. Bye.